Hey, how's it going, everybody? Mike Weber here, your Los Angeles real estate broker, with your real estate market update for the beginning of May 2022. So I think the big question on everybody's minds is, has real estate actually peaked? And so we'll try to look at some of the data, take a look at that question in more detail. Clearly, the market is definitely changing. As it stands tomorrow, the Federal Reserve is scheduled to raise interest rates, the overnight rate, 50 basis points or 0.5%. Now, of course, this is already probably baked in to a large extent into the current mortgage rates we're seeing, which have risen dramatically in just the last couple months. The beginning of the year, they were around the low threes. Now they're in the mid to upper fives. And of course, once rates go up tomorrow, they might go up a little bit more. But I think more importantly, the real question is when the Federal Reserve starts projecting the next interest rate hike, which there's been a lot of rhetoric out there, whether it's going to be another 0.5%, another 0.75%, we're not quite sure, but how that's ultimately going to affect interest rates once that becomes more of a known factor, and they're going to be up into the 6.5%, 7%, maybe above, which definitely is probably going to start to put some pressure on this market that's been pretty out of control for a while. So we'll start out, we'll take a look at the actual data in the county of Los Angeles, and then we'll move into the South Bay beach cities and see what's happening there. All right, so getting started in Los Angeles County, we're not really seeing any weakness in terms of median home prices. In fact, they're still rising pretty quickly compared to where we were a year ago. They're up 12.6% year over year. So we're still seeing pretty strong price growth in the county of Los Angeles. Now, that said, I am starting to hear a lot of preliminary data, leading indicators that things are starting to cool off. So there's not quite as much demand as there was before. Buyers are not buying as feverishly, as aggressively. More properties are sitting on the market. There's more properties that are coming up as expireds and cancellations. So of course, we're looking at kind of this leading data, leading indicators of what's happening in the market. 3 months from now, 2 months from now, we're going to start seeing what's happening with stuff that's getting listed today and so on. So obviously, we're going to have to keep a close eye on it. Clearly, rates cannot rise in a vacuum. The more that they go up, in fact, as rates go up just 1 percentage point, that equates to roughly a 10% rise in the actual payment. So as we've seen just in the last few months, rates have gone up, 2.5%, 3%. So we're talking about a dramatic increase in the cost of purchasing a home, all things being held equal. So let's take a look at inventory now, the month's supply of inventory in the county of Los Angeles. And what we see here is we are down 20% year over year. So we're certainly not seeing sellers kind of anticipate a correction in the market, an adjustment in the market. They're not listing their homes, right away to take advantage of prices while they're high. Inventory is still really low, really subdued. So that is kind of interesting. I think as rates continue to creep up and buyers continue, at the margin to take themselves out of the market, to give up on the home buying process, inventory is probably going to start growing. It's probably going to take 2-3 months before we see it, but we should definitely start seeing inventory tick up in the future. Finally, if we look at closed sales in the county of Los Angeles, we are down 15.2%. So you are seeing a little bit of softness there. Now that's, compared to last year, which was also a pretty soft year overall. So closed sales definitely starting to mellow out. That could be a leading sign of a market that's heading into a slowdown. Now let's move on to the South Bay beach cities and see what's happening there. It's not quite as pronounced in some regards. For instance, when it comes to median home prices, they're only up 3.8% year over year. So not as strong price growth in the South Bay compared to what we're seeing in the county as a whole. However, if we look at the supply of inventory in the South Bay beach cities, we are down 18.8%. So again, we're still kind of stuck in this low inventory environment. A lot of sellers are still on the sidelines, on the fences, probably because they keep anticipating home prices to continue rising, which of course, if interest rates actually in fact do continue to go up, probably won't end up happening. Now, that being said, if we take a look at closed sales in the South Bay, we see that those are also down 18.3%. So definitely seeing a trend there that follows from the county to the South Bay beach cities of closed sales being down pretty significantly compared to a year ago. But that being said, prices are still rising even in the face of interest rates rising pretty quickly as well. So all that said, have we hit a peak in the housing market? I'm going to say that if the Federal Reserve does follow through with these continued plans to raise interest rates, get them somewhere up to neutral, which nobody really knows what neutral means anymore. It used to mean much higher than where we're at right now. But should that happen and should they continue to carry out those plans, I would say it's pretty likely that housing is at or has neared a peak, at least for this cycle, and depending ultimately on whatever pivot or decision the Federal Reserve ends up making in a few months or once they see home prices start to come down, somewhat noticeably or significantly. Of course, I'll be continuing to follow it. If I can help you with anything in relation to real estate or you have any questions about real estate, definitely reach out to me. I'm here to help. If this video is useful or the information is useful, click the subscribe button, give me a thumbs up, leave your comments down below on what you're seeing. Appreciate you guys watching, and we'll see you on the next one. Take care.